Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Director of Middle East and Africa at Nasdaq. To discuss why the Middle East and Africa region are important locations for carbon markets. Into the regional trends, can you explain to our viewers what carbon markets are and how carbon markets are traded?
Morning, Jill. Thank you for the question. So typically a carbon credit is an instrument between a buyer and a seller to essentially keep carbon off the air. So these credits are created out of the atmosphere and keep emissions from being released. Each time there is or avoided or destroyed 1 metric ton of greenhouse gases, one equivalent of carbon credit is then created. These credits can be bought or sold by companies or corporates looking to mitigate. Marketplace or exchange typically lists a project specification or parameters, including the size or location or methodology type or vintage, which is in other words known as the removal time or a year and emission. Some exchanges are set up like traditional commodity exchanges that list spot or physically delivered futures and option contracts. So these voluntary marketplaces, they do contrast from the compliance marketplaces that are actually offset as offsets their offsets are traded and regulated by government mandated emission targets.
Michèle, what are some current challenges these markets face as they grow?
Yeah, sure. So there are some challenges and structural obstacles that we see to make the carbon credits mature as an asset class. There is an inconsistency in how they are defined, measured, and supplied. There is a fragmented market infrastructure when it comes to trading and post-trade in general. We have absence of regulations to foster a fair and secure trading. And without the regulations, I mean, there are so many regulations with Article 6 that are coming out from governments, etc. But without implementing these for the voluntary carbon markets, there will be issues. Now, having said that, and at this point in time, we see that these building blocks are actually there, defined, and all we need to do is to sit together, bring in the infrastructure providers, the regulators, the suppliers of these credits, the buyers, and establish.
Faycal, how is Nasdaq technology equipped to help markets overcome these barriers and seize opportunity?
So Nasdaq has a long history of providing and operating stable and resilient trading marketplaces, as we all know. We also provide technology that does underpin market infrastructure providers globally. On the digital assets and carbon credit side of things, on the trading side, we do provide technology that matches the buyer and the seller on a carbon exchange. For example, the CIX carbon exchange or CIX in Singapore, which is a global marketplace and an auction house and a globally accessible exchange for trusted spot carbon credit trading. On the post-trade side, Nasdaq provides technology that can register and transfer and then settle carbon credits. On top of that, we do have a majority ownership of a company called Puro Earth, which is a crediting platform for engineered carbon removal projects that we can basically bring trust to and transparency to the market as well. And finally, we have acquired a company last year called Metrio, which is a provider of ESG data collection, analytics, and reporting services. So bringing all that together, we do think that Nasdaq can play a really important role in bringing everyone together and establishing the ecosystem that we have spoken about earlier.
Michèle, why is the Middle East and Africa region an important location for carbon markets, both socially and financially?
Well, what we know, Jill, is that as an area susceptible for climate change impacts, the Middle East and Africa are ideal for staging ground for growth of carbon markets. We have seen the development of the regional capital markets the last 20 years. It has been a fantastic journey, especially the last 5 years. The stock exchanges has grown tremendously. The Saudi stock exchange, but only they moved from being the 25th, 26th in the ranking of the world stock exchanges to become the 9th. And I can assure you, Jill, that's not the end of the journey, that's just the starting point. The region is also known to be full of energy producing countries and with long-term additive projects for removal and storage that provides the right condition for success. Now, attracting investment and driving actions will by default generate not only the regions, but the global south at large to gain more influence in driving the climate narrative, but also growing the social and financial segment of it.
And Michèle, what carbon trends and initiatives are we seeing across the Middle East and Africa region? What are the major considerations when implementing infrastructure for a carbon market?
Well, that's actually very interesting because we see that not only there is a focus from the markets across the region, but also from the companies who wants to demonstrate their commitment to ESG and reduce the offset their footprint. Now, there are a few examples that are very interesting. We have seen the Saudi Arabia PIF and the Saudi Tadawul Group setting up a new company for the regional voluntary carbon market. That company held the world's largest carbon credit auction in Kenya. It's quite interesting to see how Saudi is auctioning in Kenya, which shows the collaboration between different countries and the region overall. But only that auction by itself, Jill, brought in 2.2 million tons of carbon credits to companies in Saudi and the region. So that's one example. The second example is the Egyptian Stock Exchange initiative collaborating with the Qatari Global Carbon Council to verify carbon credit and list these. We have seen initiative from Jordan as well, but also the African 7 countries that are collaborating under the umbrella of the African Carbon Initiative to scale the voluntary carbon markets across Africa. The most exciting is actually the newest, which is the UAE Carbon Alliance that has pledged to purchase for 450 million USD of African carbon credits by 2030. This is a tremendous number. It's significant, but it's business as usual. They are connecting the high integrity supply that comes from Africa in carbon credits and to meet the demands from the Middle East as a region. So that's business as usual, I would say.
And Faycal and Michèle, if you could both answer this, what does the future hold for the Middle East and African carbon space in the next 5 years? Faycal, if you can answer first.
Sure. I think we will see increasing channeling or Middle East becoming a center for channeling capital into such markets as carbon credits. At the same time, I think there is great effort made into building environments that support decarbonization efforts, develop innovative standards for carbon financing and increasing education and knowledge transfers, but also supporting markets and organizations on greenhouse emission reduction initiatives. I think like the UAE that Michèle has alluded to also is making some great efforts into that direction. A number of markets in the Middle East and Africa have obviously set their net zero goals to anywhere between today and also 2060, some of which have already pledged and had laws that have been approved and put into action for such initiatives. Increased its focus on climate actions and net zero roadmaps. So various sectors are targeted, including sustainable fuels, energy efficiency, greenhouse buildings, as well as carbon capture and storage.
And Michèle, will be the last one.
Thank you so much. Well, based in the region, we see the actions on a daily basis. We see that the message is clear from our region. They continue to develop the existing marketplaces. That is on the top of the agenda. AI and machine learning. They are becoming a hub for attracting digital startups and in the tech sector. They are attracting investment, tourism, everything you can imagine. So the COP27 was in Egypt. The COP28 will be held in the UAE. The region wants to be involved and contribute. They are clearly stating or delivering the message that we are not only creating voluntary carbon markets, we are also driving the discussion for common standardizations and structuring of the carbon credit market. So the next 5 years or the coming 5 years will be very exciting and interesting to follow. I'm sure of that, Jill.
All right, Michèle, Faycal, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.
Thank you.